Thank you, Mooney, for moderating the panel. Now I'm on stage, so let's do that, guys. And sorry, everyone, for just a little confusion, but now we are all here. And I hope that our panel will be valuable for all of you guys. So, exchanges. All of our panelists today are knowledgeable. They are experienced in this field, so that's why they're here with us. Before we start, guys, can you briefly introduce yourself and why are you here, actually? Why are you sitting with us? And why is it valuable for the audience to hear what you're saying? Monty, maybe we can start with you.
Yeah. So my name is Monty METZGER. I'm in the digital space since mid-90s. I've been founding a couple of companies, and in the last couple of years, I've been running a venture fund investing in blockchain companies globally. And now I teamed up with an Asian friend of mine, which I know since over 10 years, and he had been starting 2 exchanges in Taiwan. And we are now taking this technology out of an unregulated space into something which is regulated, fully compliant, and we are doing that in Liechtenstein. So what I'm founding now is something called LCX, so Liechtenstein Crypto Assets Exchange, and we are doing that in teamwork with a bank. So we have a bank as a shareholder, we have a proven technology platform, and last but not least, we're doing that in a fully regulated environment in Liechtenstein.
Thank you. Konstantin?
Yeah, as I briefly introduced me again, I'm Konstantin, CEO at Changelly Instant Exchange. We are a worldwide business. We have tons of customers, about 2 million customers from US, Asia market, and also many customers from Europe. We have a lot of integrations with wallets, JAX, Coinemy. We are biggest partner of CoinMarketCap, and Binance. We also Binance partners. So, yeah, just what we are doing.
Thanks. AJIT?
Hi, my background is in capital markets, consulting, regulation, and technology. Spent several years at Goldman Sachs, Barclays, Credit Suisse, and UBS. Started the blockchain UK business for PwC, built it for 3 years. Then over the last 8 months now, I've been working at ConsenSys. ConsenSys is a ventures production studio based in Brooklyn. We have an office in London.
Not the conference.
Thank you. No. So yeah, we have offices. Now we are starting various teams all over Europe, and we have an office in London. I'm a partner with the London business, and I focus on our global decentralized exchange portfolio. That's quite an exciting area of both experimentation and ecosystem development, and I spend a lot of time working on policy, regulation, technology, and ecosystem growth.
Thank you. Bobby?
Hi, I'm Bobby Lee. I'm a board member of the Bitcoin Foundation, and I'm also the co-founder of BTCC. We're known first as BTC China. So I used to run BTC China. It was China's very first Bitcoin exchange that was started in 2011. And due to circumstances, it actually had to shut down late last year in September of 2017. So we ran for a good over 6 years. So at one point, I ran one of the world's largest exchanges and also the world's longest running exchange because Mt. Gox closed down. So we had that dubious honor. But in any case, so I don't run the exchange anymore. So I'm a free man. I'll speak anything I want.
I have a question regarding BTCC a little bit further. But anyway, thank you for clarifying. So I would love to start our panel with one interesting quote, and then based on this quote, ask the questions to you guys. So there is a very interesting thing. One man said, "Money united people much better than any religion did." So cryptocurrencies nowadays turn out not just to be another way of money, but especially for early adopters, turn out to be a whole religion nowadays. So, and cryptocurrency exchanges in this way play a very big role. They know the trends, they can influence the market. So the first question will be pretty broad. Cryptocurrency exchanges are playing one of the major roles in bringing cryptocurrencies to wider circulation and finally can bring them to mass adoption. Do you agree with this statement, and just what do you think about this?
So, Eddie, absolutely. I think at the moment, their institutional investors are lined up to invest into that space. But currently, there are not many places where they can do it in a fully compliant way. And so that's why I think it's really an opportunity that exchanges enable to grow the market space overall. So I am true a believer that we are still at the early ages in the beginning. If you look at financial assets to be tokenized, we're talking about several $1 trillion entering the market in the next couple of years. And that's the big opportunity, to really take it out of the kind of the niche to become a global opportunity.
You said about institutional investors, right? That's another very big topic. But right now, I don't think that there are no institutional investors coming into the space. And I think, personally, that the quality of trading now, the liquidity is pretty low, right? So what do you think about it? Do you agree with this statement?
Absolutely. So imagine if large funds would start trading, most of the exchange would collapse, more or less. So the whole infrastructure needs to be built and needs to be brought to a different level. And so institutional money is basically watching the space, and it's already starting. You know, there are a few areas where they're already active, and of course, security token exchanges will play a dominant role for that. So that's why we developed something called the Liechtenstein Protocol, where we are setting up a legal infrastructure where we could do security token trading as well.
How is it different from what we have now in terms of regulation? You say in Liechtenstein you're going to wholly regulate it, right? So it will be a wholly wide area.
Yeah.
How does it look?
Well, if you look to the US, there's the big discussion about utility and security token. I don't think that's really relevant. We could say we're building something which is more hybrid. Because the ultimate goal is actually to make sure that investors are kind of secured. So what we do is we issue kind of investor passports. So when they comply with AML and KYC regulation, we then check on both sides and just make sure that each trade is happening between these kind of fully identified investors.
What does it mean for current traders? Those who are trading now, for example?
Well, on LTX, it will be kind of a separate kind of, I would say, channel. So one would be the crypto assets as we know it, and the other one will be fully focusing on security tokens. Okay,
security tokens is also a very, very big topic. So let's go into security tokens if you told. If, for example, the regulators consider all of the current tokens as securities, what will happen with the industry? What will happen to the crypto exchanges? What do you think, guys?
If I can take that. I mean, I don't think regulators will consider all tokens as securities because ultimately, tokens are a way of implementing or digitizing assets or implementing digital assets that have economic characteristics of either commodities, securities, currency. So it all depends on the actual, I mean, tokens are programmable money, right? And depending on the economic characteristics and of the implementation or the economic behavior of the token, the regulators will effectively govern those under some of the existing rules. But then in certain cases, the existing rules may have to be adopted for this new technology as well. Right. So, for example, I mean, it's very hard to argue that Bitcoin or Ethereum are securities, right? They are widely spread, decentralized, mined commodities, and the CFTC governs Bitcoin already as a commodity. So, but to the extent that certain tokens are security, and then a large number of tokens will fall under the definition, then we will have to understand as to how the various rules and regulations that govern the behavior of securities exchanges will apply and will probably need to be adapted to this new ecosystem.
Good. Bobby, and what's going on in China in that terms?
Before we talk about China, I want to comment on the earlier topics. So you were asking about cryptocurrencies as investments, whether people are putting in money. I want to make a distinction, and I think most of the audience knows this, but it's meaningful to really think about this more carefully. For the first time since the invention of Bitcoin, we have true digital assets. And I'm talking about the decentralized digital currencies, of which Bitcoin is amongst the leader. Yep. However, if you look at CoinMarketCap, if you look at all those sites, literally there are hundreds of other tokens or coins being exchanged. But those are not all cryptocurrencies. Many of them are crypto tokens. And tokens are just a representation of something else. They are, in fact, centralized. It just happens to be a digitized asset versus a purely originally digital asset. So that's why I want to emphasize, a lot of people, especially new investors, come in. They think it's all the same. They think that buying an ICO token is the same as buying Bitcoin, Ethereum, Litecoin. And I urge them to really study that more carefully. It's quite different. It's like confusing the role of money, euros and British pound, versus what you can buy with the money, let's say on the German, French, or the London Stock Exchange. So the stocks that you can buy on those stock exchanges are different than the currency that you use to buy the stocks. And furthermore, like you said, some tokens are not even securities tokens. They're just utility tokens. To me, that's like movie tickets or golf course tea time coupons. So I don't know. I don't see a lot of people investing in golf course tea time coupons. But I don't know about you guys.
In terms of regulation, right? What's going on in China now? Because like so many.
Yeah, so the China regulation is a question. So we saw the rise and the subsequent closure of the Chinese Bitcoin exchange market. And that came to an abrupt end in September last year of 2017. So the process leading up to that, so obviously we had the big hype and hoopla in 2013. That was almost 5 years ago. And then most recently, a year and a half ago, in January of 2017, that's when the Chinese regulators first came and tried to figure out what's going to happen. And we had our ups and downs. In January, we all got called in to a meeting with the PBOC. And then by March time, all the Chinese exchanges actually shut down withdrawals, if you recall. And the purpose of that was to try to please the regulators and say, hey, there's not going to be any more money escaping the system. Because if Bitcoin withdrawals are stopped, you can only trade on the price. Then of course the price came down artificially, but also people couldn't get access to the actual crypto assets. So that stayed until June, and by June all the exchanges lifted the things again. We had thought, and I'll share a sort of industry insider knowledge with you. We had actually thought, we all thought that the license was coming. We were this close. So according to our sources in the different regulated departments, there was a final draft of the Chinese so-called crypto exchange licensing documentation. It listed all the prerequisites to apply for the license and who would get it, and there's going to be 3 exchanges that's going to get it, and so on and so forth. We were this close. But the trigger, this may be surprising to you, the trigger was actually the WannaCry virus malware in May of 2017. Do you guys remember that? The WannaCry infestation?
NHS, so I do.
A lot of sites and regular companies, and it demanded ransom in Bitcoin. So that actually gave Bitcoin a very bad name. The governments were all afraid again. Oh my gosh, Bitcoin's being used for bad purposes. But so is the US dollar and the Chinese renminbi. But anyways, so since Bitcoin was used to ransom for that, they all got nervous and they rethought the process. And at the time, by June, July, the ICO wave came in full blown. And that's when, I think it was August, they decided, okay, the heck with it. We're going to reverse direction, not issue licenses in China, but rather put a full stop to everything. So on September 4th, they issued a notice, put a full stop to all ICO, declared all ICOs illegitimate forms of fundraising. They asked all ICO issuers in China to refund all the fundraising via ICOs and the private sales and all that stuff. And then in that notice, at the very bottom, they say this applies to all fiat and crypto exchanges. So that was a loophole. Well, it's not a loophole. It's actually the circle everything. It was like the check mark, select everything. So when we saw that, we're like, they must just be talking about ICOs. We thought that Bitcoin and all that were in the clear. But apparently 10 days later, we found out that was not the case. They're going to use that last paragraph to apply to everything. So all the exchanges voluntarily shut down.
I do remember that times because I was in China and I had to go to some of the conferences, but all of them were shut down too. Most of them, or moved to Hong Kong. So it was absolutely crazy times. You already mentioned BTCC and told that you've shut it down.
No, we shut down BTC China Exchange. So BTCC, our international business, actually got acquired by an investment group in Hong Kong. So that got acquired earlier this year.
Okay, so you as you've said, a free man right now, traveling the world.
Yeah, and I want to emphasize the free part because some of my Chinese colleagues are actually on lockdown. They can't leave the country. But I go in and out with pleasure.
Great.
Because I follow the wishes of what they want.
So guys, let's get back to the initial subject. We've mentioned institutional investors, right? And we've mentioned the low liquidity and the quality of trading right now. Before coming back to the game changer to institutional investors is, I think, who are the people trading now? Let's go deeper, right? So if we say that trading right now is low and the quality is low and the liquidity is well, who are the people trading?
So corporations have Bitcoin on their balance sheet and Ether on their balance sheet. In fact, it's a big topic of debate amongst audit firms. I used to work for one, as to how what the accounting treatment for crypto should be, right? And it's a complex question because it depends on the tokens or the cryptocurrency you're holding because depending on the type of the asset, the accounting treatment is going to be different, but it's a big topic of debate. Then remember that most of the volume for crypto in the world is OTC. It's over the counter. It's not going through exchanges. I mean, at least 80%, if not more. So if you look at the likes of Circle, Poloniex got acquired, but Octagon Strategies and some of the big OTC desks, then they're still processing the majority of the volume. Then that will move to exchanges when exchanges, and a lot of hedge funds, or to the extent in certain countries where institutions are allowed to invest, are actually going OTC. They're not going through exchanges because exchanges aren't quite ready to support institutional requirements. Now, when you think about investment banks, then investment banks have to worry about a very large number of regulations, right? They have to worry about the Volcker rule, as in they can't trade prop unless the asset is unless the asset class is permitted for trading. If they want to make a market, then they have to do a lot of compliance and regulatory work before they can actually make a market in crypto assets. They have to worry about custody, right? So crypto custody is still a big topic, and you can do cold storage, but as a market maker, cold storage doesn't work because you want to trade in and out of the asset quite quickly. So then there is a whole bunch of concern amongst regulators about systemic risk. Once they open the door to crypto, then how long before crypto becomes a 10 trillion asset, like junk bonds in Michael Milken's times, and brings down a major institution, right? So pension funds have restrictive investment policies, asset managers have restrictive investment policies. So this is the thing. When institutions enter this space, they will bring a very large body of regulation with them, and that's something exchanges aren't prepared for, whether it comes to their technology preparedness or regulatory preparedness. And Coinbase in particular is making a lot of steps in this direction, but then a number of other exchanges have to sort of up their game in terms of compliance, because it isn't just about KYC and AML. It's about a very large set of regulations around market risk, credit risk, and operational risk, and sort of hiring a bunch of auditors to look at what you're doing. And getting a good body of lawyers to look after your activities before you can say, yes, we are an exchange that's open to institutional business.
Is it a positive or a negative thing for?
I think it's inevitable, right? So crypto is a new asset class, and crypto is also a blockchain at the end of the day is a technology for a vastly more efficient implementation of existing asset classes. So if you think about how the equity markets work today, right? Listed equities are very, very efficient, right? So you can trade very large volumes in and out for very, very low cost. I mean, I'm talking hundreds of bips, so for very large block trades. But when you think about illiquid stocks or gaming tokens or commercial real estate in the middle of Berlin, then a lot of these assets have no access to global liquidity, right? And the trading, listing, all adds up to a lot of cost, which makes it very, very difficult for people to monetize the various assets that they might be holding, whether it's intellectual property and so on and so forth. So tokens as a technology allow digitization of all of these assets, of all of this property that people are sitting on, and give them access to liquidity. And that's really the value of even the long-term value of crypto, because you can create a lot of liquidity for assets that don't currently have liquidity, and therefore create a vastly more efficient global capital market. Now, today you have to go through a CSD, multiple custodians. You have to go through. There is a very long list of intermediaries that eats into my pension, right? So with blockchain, we can create a global capital market. We can, where the blockchain is effectively a CSD. It's the registry of balances as well as the contracts that govern the behavior of those assets, and therefore create a vastly more efficient market infrastructure. Right? And this is going to be a global digital asset market, right? Now, in order to do that, we need globalized regulation. So G20 has asked for, sometime late this month, for opinions from crypto market players as to how the regulation should be harmonized and so on. So the regulators are aware that this is going to be a global market. Regulators are aware that there needs to be adoption. The regulations need to be adopted for this new world that's coming for all of us. Now, so I think it's up to the crypto community, which is us, to engage proactively. But is it a positive? Absolutely. I mean, most of the money is still managed by institutions, right? And it isn't just a positive because people who are holding crypto will get very rich, but it's a positive because once institutions are in this game, then we can have a far more organized, regulated, and well-behaved digital asset market.
We say can, we are in process, and so on. So when do you think, what are the terms, and when do you think it will happen?
Yeah, so this reminds me of what Joe is the CEO of ConsenSys and the co-founder of Ethereum, said in New York at the blockchain accounting conference, which is, if you are in the, we are linear thinkers in the middle of a nonlinear space. So you feel like if you're not in that process, then you feel like nothing is happening, nothing is happening, nothing is happening, and then suddenly blockchain is everywhere, right? So we have seen this with other technologies, and if you're not actually involved in some of these conversations, then you feel like nothing is happening. But remember, we are trying to change 50 years of regulation, right? So we are trying to, and this regulation that exists today in securities markets was written for technology that's now several decades old. Now we have brand new technology, which isn't quite ready, by the way. So that's evolving as well and maturing as well. So regulators are also coming up to speed, and regulators aren't engineers, right, normally. So it's up to us as the crypto community to engage and sort of educate and help influence the policy and also govern our own behavior, right? So we got to get our act together.
Of course. So talking about crypto exchanges, we cannot mention hacks, right? And according to one of the latest articles that I've just read, around 1.2 billion were stolen in crypto, and one of the major parts of them was stolen from the crypto exchanges. During the first day of BlockShow, I've heard the phrase that banks are hacked every day, but no one talks about it, right? So, but everyone talks about the crypto exchanges hacks. So what do you think? It's a real big problem in terms of security and in terms of a long-term trust in the community, and or it's just an essential thing? I mean, all these hacks and crypto hacks.
So I'll just take 2 minutes and I'll pass this on. So a couple of things, right? When a bank is hacked, then in the US, my deposits are insured by the FDIC to a certain limit. In the UK, they're also insured. When my bank is hacked, I can get some money back. When crypto is hacked, we chose this life, right? So we said, oh, it's peer-to-peer, it's decentralized, the government should stay out of it. So obviously, I can't get any money back. Now, there are some protocol changes that have been proposed, right? So Parity Wallet got hacked, and the Parity guys have a few proposals as to how that money can be recovered. Now, at some point, blockchain protocols might come up with solutions that allow honest investors to recover their money, right? And but that's a hard problem to solve. At the same time, decentralized exchanges, right? Depending on how decentralized they are, and that's my area of work, normally assign the custody of assets to the individual. You can trade straight out of your Ledger wallet or Trezor wallet, right? Now, in that case, you're obviously responsible for the custody of your own assets. But if you want to implement an institutional custodian, and to plug in a little bit of a shameless commercial here, we are building an institutional-grade custody platform called Trustology, and you need to buy insurance. So a custodian needs to provide insurance as that's one of the parts of being an institutional-grade custodian, right? Now, yes, custody is a major challenge, and part of the reason custody is a major challenge because it's a game between hackers and people who are trying to protect your assets and people who are trying to steal your assets, and you sometimes don't know who is who. But at the same time, there is a lot of progress that's happening with technology in the custody space. We are expecting institutional-grade solutions to be ready by the end of this year, at least our own. And I mean, it's for crypto that individuals want to manage on their own, and there is no mandate from the regulators as to how custody should be done, especially for decentralized exchanges. I don't have a good answer as to where the world will go, but in the long run, once this market gets more and more regulated, then and governments intervene, then there will be a need to protect small investors and grandma. Grandma is my favorite investor, and probably some FDIC-like scheme will be created.
I don't think FDIC scheme could work for crypto. The reason is in FDIC's case, they just print more money and make everyone happy because it's basically debasing everyone else for the small few people that got hacked. But in crypto, let me remind everyone that two things. Number one is that there's only theft if it's worth stealing. That's the basics. Right? In the old days, whether it's ships shipping gold over the oceans, there would be pirates trying to steal these ships, the gold from the ship. And then when there's Pony Express moving the gold from one coast to the other coast, there'd be these thieves trying to steal the wagons and the chests of gold and silver. And it's the same with crypto. I think every exchange is either getting hacked, got hacked, or will be hacked. In fact, every exchange will continue to be hacked in the coming years. I can assure you that. So the real issue is for all of you who invest, who have your crypto on exchanges for momentarily or for long periods of time, just make sure you're dealing with a reputable exchange that has the financial resources such that if they do get hacked, their equity can cover the losses. You don't want to be dealing with an exchange that got hacked years after years and then find out, let's say on a January or February of 2014, that, oh, sorry, let's just use this one excuse and say, hey, we're completely out of it. We couldn't pay back everyone at all. So that's a real big problem. That's why I tell people, don't put your assets on the exchange unless you're trying to sell the Bitcoin, in which case you load it onto the exchange and sell it, or unless you're loading money into it and you buy the crypto assets and you take the assets off. I don't care if it's tokens or crypto assets. And then in terms of insurance, so when I ran my exchange, we actually talked to a lot of insurance companies. We even went to Lloyd's of London and talked to them. And what I found, and by the way, currently there are many crypto companies who advertise they have their crypto insured. And if I were you, I'd read the fine line because I found out that the insurance industry is also quite greedy. Just like every business. They want to make money. They don't want to be in a sucker deal. So what I found, and I can talk about it now because I'm not running an exchange. I'm not insuring any assets. If you're doing custody service, same thing. What I found is those policies that they offer you will only pay you if all the conditions match. All the conditions are true. And inevitably, there'll be conditions out there that basically disqualify if you're the day-to-day operations of a company and your crypto assets. So in most cases, they buy the insurance. It's cheap. It's only 1 or 2% a year. And the reason it's so cheap is it doesn't pay out. But what they do get for that 1 or 2% is the marketing effect that it's insured. Okay, so I've yet to see a hacking incident getting paid out by an insurance company. I don't think it ever will. For the true policies that can get paid out, in fact, I'm willing to underwrite your exchange and stuff like that, but I charge you 20 to 30% premium a year. Would you pay that? If you pay it, I could offer that.
Just two comments there, right? So first of all, if you want, centralized exchanges are honeypots, right? They are a natural target for hackers. You put all that money on an exchange, obviously the hackers are going to go after you. So decentralized exchanges are probably more aligned with the ethos of the crypto community, where the individual is empowered to hold and trade their assets. So we are doing a lot of work on decentralized exchanges today. We have 4 different spokes and a couple of investments. Then the second part is about insurance. Again, the crypto community will have to come up with decentralized insurance solutions, right? This is something that's
DAO.
Yes,
Decentralized insurance for the Ethereum.
A DAO could be implemented to create decentralized insurance, but a peer-to-peer...
I don't like it.
A collective insurance scheme is not particularly hard to implement on Ethereum.
So, by the way, fiat money works out like that. Fiat money works exactly to that principle, where everyone pays for the loss of the few.
Oh, but that's how insurance works. We all...
No, that's not true.
Well, if you get health insurance from your company, then...
Real insurance, the underwriters pay for it.
Well, I mean, so insurance is a way of spreading risk. 10,000 of us get insured, and then somebody gets sick and they get paid, right, for healthcare.
It's optional. Only people who want to be part of it should pay for the risk.
So sooner or later, everybody gets sick, and this is where I think we're going to disagree on the philosophy.
Well, sooner everybody gets sick, but not everyone buys health insurance.
Absolutely, and that's why there is a big problem in the U.S. about it.
Difference.
Right. So I mean,
I agree that everyone gets sick, but I don't agree that everyone is compelled.
I'll make a comment here, right? The world looks different if you're a crypto whale and when you're grandma. When you're grandma and you lose 10 bitcoins, it's really bad. But if you're a crypto whale and you lose 100 bitcoins, that's okay. So so yes, it should be opt-in. Insurance should be opt-in.
Yeah, what's kind of add about the exchange hacks, actually. For the last few years, I've heard about many exchange hacks. Like most popular is phishing, when you replace the domain name with, let's say, MITRE wallet guys. I talked to them in New York, and they had about 3,000 or 4,000 of fake domains, and people trying to Google like mitrewallet.com, and it's an advertisement for phishing websites. And on Changelly, we're always trying to educate people not to click advertisement links, always to check the domain names. And also the same things for exchanges like phishing websites for huge exchange services. And if it's custody, even if it's a decentralized service, you can do nothing against phishing. When the service asking for your private keys, just send the private keys. And it's a big concern for me. Our mission is always to educate the market, to educate the new people, to educate the newbies, what is the private keys, how to save your private keys, how to trade on custody services. Okay, if you want to trade on any kind of exchange, just deposit a small amount of money or make a trade and withdraw. And another concern for me is Bitcoin is decentralized nature. And it's a decentralized technology. But most of the exchanges volume, about 99%, is still going through centralized services. Because centralized services, it's only available for high-frequency trading, and it's have a nice user interfaces, friendly user interfaces, and the experience with decentralized services are not so good. So what I expect more decentralized services for sure. I expect the improvement of technologies, and also we need to continue market education. Yep.
Regarding security, I know I use Changelly myself when I exchange like Bitcoin to Ether or whatever. So security for me is very important. So how do you at Changelly, for example, deal with security of your users? Is there any specific technology or maybe, I don't know, process of doing that?
So even if we are a centralized service and we have our custody for sure, and we have our own liquidity on different exchanges, we are providing the background trading for you. but you deposit funds only for the short period of time, and it's not a huge risk for you. It's less risky than if you deposit to any other kind of a service. And we are doing a background trading for you and withdraw funds to your wallet. If you store your crypto in any wallet that you control your private keys, it's okay. It's much safer than store your crypto on any exchange like even Binance or Bittrex. It's all centralized services. But I'm curious that many people are still using exchanges like wallets. So we should dedicate guys, just withdraw funds from the exchanges. If you want to trade, make a deposit, trade, and then withdraw. Or even use Changelly or Shapeshift, our competitor, actually. We have integration with a lot of wallets. You can trade right from your Jax wallet or Coiname wallets and just save your money, make your money safe.
Sure. Cool. We mentioned decentralized services so many times and decentralized exchanges. But personally, maybe I'm wrong, I've never seen any decentralized exchange really taking off. So what's going on? And is it really something worth it, or is it just like words and not more?
Can someone tell me, is the technology there yet? Do we have a real, workable, viable, decentralized exchange?
Let me take that. So yes, I think this is an area of lots of experimentation and research, and most of the...
No.
It's a cautious yes. So let me
research.
Well, so most of the volume still goes OTC, and then amongst a part of the most of the remainder of the volume goes to centralized exchanges. But the trend line of the percentage processed by decentralized exchanges on the up right now. Unfortunately, not all decentralized exchanges are decentralized. Like Ether Delta had custody of my Ether before I lost a couple of Ether to the Ether Delta hack, right? Now, but if you look at some of the new protocols like 0x, then they're far more creating a far more decentralized ecosystem. Or if you look at AirSwap, in AirSwap, we have spent a lot of time creating a user interface that's very, very friendly to the individual investor and allows the individuals to connect directly to crypto market makers, right? And that's where potentially the OTC desks can offer their services. And in fact, Octagon ANX are building a decentralized exchange, which will allow their OTC desk to essentially trade crypto directly with individuals. So there is so this is an area of where people are trying a lot of different things. There are many decentralized exchange protocols now, and there is a whole spectrum, right? So not every decentralized exchange solution decentralizes everything, whether it's matching or custody or the actual clearing and settlement of assets. Now, but the direction is that for a very large amount of decentralized assets that don't want to pay listing fees on Binance or Huobi or something else, will essentially be will naturally like to offer their assets on 0x relayers, which act like OTC bulletin boards, or to go through an AirSwap-like protocol, or for institutional solutions, something like Omega 1 will scale to a level where you can do dark pool type of crossing in a decentralized exchange-like solution. Now, right now, to Bobby's point, it's a bit like watching Netflix on dial-up. The user experience is not great, right? But that's what I used to do when I was 21, and now Netflix is the only way things work. So I'm extremely bullish on decentralized exchanges, but at this time, yes, there is a lot of work to be done.
So I'll disagree with you quickly. Unless, by the way, I don't see fiat money going away anytime soon.
No, neither do I.
Anytime soon. So as long as an exchange, we're talking about a crypto exchange that deals with fiat money, meaning fiat money for crypto, crypto for fiat, that exchange will never be decentralized.
Central banks tokenize fiat directly on the public blockchain.
I'm not holding out for that. I'm not holding out for a decentralized.
I'm working on that, so that's definitely something that's going to happen.
Yeah.
It'll take time, but it's going to happen.
Yeah.
There's a difference between something will or could happen versus something is already here.
Yeah, but we could say that about Bitcoin before 2008, right? It wasn't there.
Yeah, but that's why we didn't have conferences about Bitcoin before 2008.
We had Hashcash, and we had DigiCash, and we had a ton of stuff that didn't work. So
I don't see you using Hashcash or DigiCash.
Right, but the thing is, things evolve and mature and become real.
Yeah. I think I have a little bit of a different approach to the overall ecosystem. I mean, we are talking about ecosystem trends here, and I think it's a very unique moment in time where the industry will evolve to something much bigger and broader. So when we talk about security and hacks, it's true, banks are getting hacked, and there are many incidents in the last couple of days only. And then also kind of scalability and technology, decentralized, centralized, whatever. But I spend most of my time talking to like global leaders who run private equity funds, billions of dollars under management, or real estate funds or something. They, if they look at it, they need different systems to actually that the overall ecosystem is thriving. And I think as we are looking at the industry today, the next 10 years will probably usher more trends than the previous 50 years in financial markets overall. And that's, I think, is very exciting to look. So if you talk to the people outside of the industry, we're the kind of newborn. We look back to the old one, but we are building our new infrastructure, our new world. But if you talk to leaders from financial institutions outside, they don't really care about details about technology. They want to make sure that they can make a profit out of it, and of course it should be secured and everything like that. But overall, there's still many steps to take that we can actually grow much bigger in terms of overall market size. And I think nobody is competing more or less, but we are all here sitting all together to make the future happen.
Yeah, but don't you think, you said that they don't care about the technology, but almost all people, I guess, here do. So don't you think that this fact is actually the stop for making it more, not more, but quicker?
Oh, absolutely. I mean, the technology is core. We have to build the technology which enables a secure trading environment, whether if it's a centralized or a hybrid exchanges or decentralized, whatever. But overall, the goal would be to get it to the next level.
Bobby, you had your own point on decentralized exchanges. You had some kind of argue with AJIT, but you don't believe in this concept. You don't believe that they take off, or you don't. What's the purpose? What's the point?
Well, it's similar to my views on blockchain. So basically, I encourage people to go research it. But if it's not here, it's not here. Don't pretend it's here. So from what I've seen, I don't see a working decentralized exchange anywhere. If it did, it'd be, we wouldn't be talking about a theoretical. We'd all be using it. So there isn't one. I've been in exchange business for more than 5 years, 6 years, and maybe call me traditionalist, but I think in some ways centralized exchanges are the only solution, especially when it comes to fiat money. Unless you guys are all out of fiat and all you trade is crypto to crypto, then maybe with atomic swaps and all that stuff, you could have a decentralized exchange. But until we don't use fiat or exchange into and out of fiat, in my mind, centralized exchanges are here to stay. It's same with, by the way, it's same with blockchain technologies. Can I rant about blockchain here? Or is this, yeah, this is BlockShow, right? I didn't say blockchain. Okay, anyways. So blockchain, my theory, and I'm going to write a book about this, is that blockchain is actually not suitable for any real-world activities. Is that a controversial statement?
It is. Thank you.
Curious as to why. The reason I see is because people always talk about blockchain, the immutable, public, decentralized aspect of blockchain data. Everything's very public. You could verify it. That's great. But what people forget is the data that goes into blockchain had to be publicly verifiable in the first place. If the data that goes in is only from one source of truth, of my opinion of how I see the world, then that data is not decentralized data and publicly verifiable. That's just a centralized database that's publicly shared. So anyways, so same thing with decentralized exchanges, that until it's here, we could be hopeful, but we're not I'm not a researcher, I'm not the engineer. So let them go do it, solve the problem, and then we can have conferences and solutions for decentralized.
Absolutely said it right. So when you're an engineer, you're always creating the future. So AirSwap went live and processed 1 million, which is not a lot, by the way. 1 million is nothing in the world of crypto exchanges. But the point is that it is something. It is a number that matters, right? And that number is on the up. So decentralized exchanges are becoming more important. and more prominent than they were a year ago. So, and for a lot of for high liquidity assets or for primarily fiat to crypto exchanges, centralized exchanges are obviously a much better solution today, right? But for crypto to crypto or for low liquidity assets where you don't want to pay a listing fee to a centralized exchange and so on and so forth, decentralized exchanges will inevitably gain a lot of adoption.
Yeah, well, I'm sorry, I need to add, when you're talking about the AirSwap or 0x, it's only for one blockchain, it's only for Ethereum and tokens.
Yes, right, as of now. So Coinbase acquired Paradox, so clearly centralized exchanges know this is coming.
Yeah, but actually 0x is centralized service, it's custody-free, AirSwap is also centralized service, it's centralized order book, and if you're talking about high-frequency trading, it's almost impossible to do it on blockchain, and blockchain is the purpose of the blockchain, it's not for high-frequency orders and etc.
At low liquidity and at least for now.
Yeah, that's true. And okay, for Ethereum and Ethereum-based tokens, it can be a custody-free solution with maybe some quite complicated interface.
Your ledger wallet.
Yeah, but if you are talking about the cross-blockchain transactions, because in the real world, token economy is still small, only a few % of all the exchange volume is coming from tokens trading. And most of the exchange volume is coming from the fiat for sure, and from ODC desks. And about 30 or 40% of the trading volume is for cross-blockchain transactions, like Bitcoin to Ether, Bitcoin to Litecoin. And we realize it's almost impossible to do some kind of decentralized exchange services. It's possible to do a service around atomic swaps technology, but it's pretty slow. It's most likely like local Bitcoins experience, like marketplace. Yep, it's mostly about the swapping, but all the process, it takes like about 30 minutes to do a swap, and it's not the best user experience, actually.
So in Berlin, we have a team called Gnosis. Gnosis was a ConsenSys venture. Now they have their own, they graduated. So they have created a platform which does reverse auction trading, right? So central clearing, or rather central matching, isn't the only way exchanges work. So for low liquidity assets, often you want to do a declining price auction, and that's known to be economically efficient. So Gnosis have a Dutch auction platform that's live, and for a lot of assets, you don't need a NASDAQ. For a lot of assets, you want to do a different kind of trading and clearing mechanism, and all of those experiments are open in the DEX space.
We're coming close to the next part of our agenda. So you've mentioned trading volume, and I have a question in my head regarding what are the most active regions, and I mean in terms of trading volumes and in terms of trading as it is. I mean Russia, Asia, maybe US.
So the main market for us, I can't say for any exchange service, as I see on the exchanges landscape, there are a lot of regional services who operates only, especially with the fiat money. For instance, if you see Kraken has different jurisdictions, and they operate on the US market, the Europe market, but it's different companies actually. So you sign the contracts with different companies if you are in the United States citizenship. So according to Changelly, the main market for us is still United States. About 50% of our trading volume is coming from United States customers. Also, Asia is pretty active. I'm impressed with South Korea, with Japan, with Hong Kong, also with Thailand. A lot of traders from Thailand. Europe is not so big for us. Most of the countries, it's London, Great Britain, and Germany as well, and a few others. But I see that in Europe, market is fragmented. In each country, they have their own service to exchange or to swap. But if you're talking about let's say the huge liquidity providers, and most of the liquidity is concentrated on Binance or OKEX. If you check the wallets of any token, you will see that okay, about 30% or even 50% of the tokens sitting on the Binance wallets or Bittrex wallets. So there what's the liquidity.
Thank you. So.
Should we talk about regulation or self-regulation in our space?
Absolutely.
If you wanna say, please, Bobby.
So my question for the panel, and maybe the audience can chime in. Are we going to wait for government to regulate crypto exchanges, or do you think jurisdictions will start to self-regulate?
So they've already started. Singapore have launched a consultation, and they have come up with a new category of exchanges, right? So they had 2 categories now. I'm forgetting the abbreviation, but they have come out with a consultation where they're proposing a 3rd category of exchanges, specifically to support the decentralized exchange ecosystem. We should all respond to that consultation. At least we will. And Abu Dhabi has just completed a consultation on spot crypto asset markets, right? This activity is starting in various jurisdictions already, and I think it's time to engage with that process.
Yeah.
Yeah, I believe regulation is an important topic. It shouldn't be too tight that there's no creativity in entrepreneurship and everything like that. So that's a big discussion. But actually, we chose to incorporate in Liechtenstein due to something called the Blockchain Act. So with the Blockchain Act, the government is actually opening up a set of laws which are enabling the industry to thrive, which are like loose enough to give a framework, but still not like making it too strict that it's completely blocked. And I think that the balance needs to be right. And so this will be officially announced alongside the launch of our platform, like end of June. And so everybody watch out for what's coming out of Liechtenstein. I think I know what's coming up, so we have been working with the government very closely to already be ready when it's coming up. And so what I see now is that it's basically one of the key competitors against Singapore, Malta, probably other jurisdictions, especially in Europe, probably one of the best places to be.
Yeah, so I'm actually super excited to hear these comments. And the reason I asked the question is because for the first time, now we have this industry, because it's crypto in nature, these exchanges business can really go everywhere. It can go anywhere in the world. There are over 200 countries in the world. So basically, it's going to be very competitive. Some countries are currently making the wrong choices and clamping down, and they're going to find themselves just going to be uncompetitive. They really kill their gold-laying goose. And they're forcing the business to go to other jurisdictions, which is more open-minded. So I'm really excited that many countries in the world are starting to realize that they could leap ahead. It's just like some countries, before they developed all the telephone networks, they won't go straight to mobile.
Yep.
Right? So some countries maybe missed the internet sort of revolution. They can go straight to crypto. And I think that's going to be very exciting in the coming years.
And that's also so exciting about the industry overall we're in. So I've never seen any technology where governments started to compete, like where you should open up your company.
Yeah.
And so this is also because of the fact it's a really global market, and nobody has tackled that before. So even if you're locally, you actually have to think global from day one, as clients could come from every jurisdiction in every country.
I think.
And then the ecosystem overall might empower changes where governments might be at risk. They will be disrupted as they're losing kind of key financial assets within the country itself. And when you look at countries like Venezuela, it could be the kind of empowering a whole revolution. And I think the key infrastructure players need to be in place for that. So exchanges are definitely one of the key infrastructures which we had to involve and expand in terms of functionalities.
Now, one thing I would add is that exchanges and clearinghouses, or rather what we call financial markets infrastructure, is one of the most regulated activities in all of financial services, right? So you have to worry about KYC and AML, you have to worry about IT resilience, you have to worry about custody-related rules, you have to worry about systemic risk and prudential regulation, and you have to worry about market manipulation, market transparency. There's a very, very long list of rules and regulations that you have to worry about if you're running a NASDAQ, right? Now, when crypto starts to become that important and that systemically important, then us cryptos will also have to worry about all that. So if we don't educate ourselves upfront right now, and engage with regulators right away, then we will get the regulation by default. We'll get the regulation which is, no, thank you, you can't do it, right? So, which is why it's quite important that we, in the crypto community, sort of get ahead of the game and learn about what regulations are already in place today for current market infrastructure, and then see how it needs to be adopted. All of those rules need to be adopted for this new infrastructure.
I just wanted to add, to be honest, I'm not so happy with regulation, but I understand that governments is trying to protect you just against fraud, and it's a lot of fraud in crypto community. Yeah, that's true. But one thing why I love Bitcoin, you can transfer $1 million from one wallet to another wallet and just pay $5 for that, and you don't care is it a bank or should I sign some transactions or sign some documents like for wire transfers, especially for cross-border. And that's as I see, it's like a parallel world. Here is old cryptocurrency. Old money world, regulated, highly strong regulated, and here is a new cryptocurrency world. And for sure, when the world are crossing, it's fiat to crypto transactions. Yeah, I think it should be regulated. Yeah, just against fraud. But if you're talking about all the cryptocurrency market, I think it will grow really faster if it's still just like not so close with the regulation. Yeah. That's what my opinion.
And there might be a lot of platforms who won't be regulated at all. They will and they are already. So I mean, they are operating globally, and the beauty of it is actually that it just works like it and gives freedom back to the people. So this is the kind of overall concept. And if you talk to a couple of true early adopters, you see that they don't think about regulation at all. They think the government and the old system has to change rather than adapting it to the old rules. And I think if you look at a lot of innovation problems, you can't fix the future problems with old tools. Tools need to be adapted in a way, and we are in the process of doing that.
That's why we launched Project Brooklyn, right? Project Brooklyn is about creating best practices on a community basis. I mean, by engaging the broader blockchain and crypto community and then we have a process of engaging with the policy makers as part of Project Brooklyn, and everybody is very welcome to join, but we are also support other initiatives to create community-based best practices that we can then educate the policy agencies, bodies on.
Talking about two parallel worlds, one is crypto world and one is regulated one. Will then, if it happens, this world, which is crypto world that you've mentioned, will be illegal then?
I think it should be like a distributed governments actually in crypto world. Yeah, it's
future, right?
It sounds like maybe utopia for now, but I believe in distributed governments actually. So, and if you are talking about the globalization, the businesses are becoming more and more global, and I couldn't even imagine that I can serve the customers all over the world now. So just in a few clicks. And it's pretty cool. And so I expect, for sure, governments, I expect distributed organization based on protocols on the blockchain. So that's what my opinion.
So I actually agree that crypto is a threat to many governments. So many governments are jealous of the success of crypto assets, cryptocurrencies. So it's very conceivable that some countries will actually ban the notion of people, private citizens holding crypto. So that might be the law. Some countries already have the pseudo law, but the real issue is it's impossible to enforce because crypto is just information. So we could memorize it, we have it on a piece of paper. There's plausible deniability. You could tattoo it on the back of your neck or whatever. So it's one of those things where in the future there will be countries that are truly free, where people will have the freedom to hold crypto and freedom of money, and then there'll be other countries who actually outlaw crypto, just like some countries outlaw certain religions, same kind of thing.
A shift of power, actually back to the people.
Back to the people, absolutely.
With that power, also a lot of people don't want to see that happening. So that's why there's not so much reports about banks being hacked, because they want to suppress the kind of new things which are coming up. So and then you actually see that the ecosystems have to be developed a little bit better to make the power shift happen.
I mean, so the regulators we have engaged with, and I spent a fair amount of time with regulators, at least in the US and the UK. In the UK, the FCA's view is that we don't regulate technology, we regulate behavior and activity, right? If it's a financial service or a financial activity, then the behavior should be governed by the same set of principles. And I think it's a fair notion. In the US, the regulation and policy making is more rules-based, right? But here is my take on it, which is we are not waiting for the rules to happen. We are working with where we want, I mean, policymakers have a hard job. Regulators have a really difficult job first to understand this technology, then to understand what's really going on, and then to create an environment where consumers are protected and investors are protected, right? So that's important. Those are policy objectives. And it's up, which is why we are proactively engaging and not waiting for things to happen, and I think that's what we should do.
Thank you so much. I guess we are almost run out of time. So to crown it all, I guess we can say that decentralized exchanges is some kind of an illusion, right? For now, especially for now. Regulation is coming.
To air swap.
Right? Institutional investors is a game changer for the crypto exchanges and for the whole community. And who knows, according to Konstantin, there will be two worlds, two different worlds, one crypto world and one wholly regulated one. Thank you so much for listening to us for 50 minutes. It was a pleasure for us and hope valuable for you. Thank you.
Thank you very much.